everyone. Welcome to VTC African Development, where your home is our pleasure. My name is Kay Thamini, and like summer, we are back. Today, I am excited and thrilled to share that I'm joined by giants in the property space and the mortgage market. Before I waste a further of your time, Tim and Verissimo, welcome.
Thank you for having me.
Sure. So we mentioned something off camera and you talked about mortgage, and already someone is like, oh my goodness, I might just qualify for a house with VTC. Can you share more on that? Share on the partnership and yeah.
Yeah, so Kat, we're really excited about the partnership with VTC Africa. In fact, today's the first time I'm seeing one of your products, right? And I walked in here and I mean, this stuff is aspirational. I say to myself, well, if you're a potential buyer and you walk in here, automatically you get so excited. And often that excitement sometimes gets soured by this idea of, okay, now can I actually afford this place?
Sure.
And so the partnership with VTC Africa was about saying, how do people get excited about the properties that they build, and how do they at the same time in the privacy of their cars or their homes also understand whether or not they can finance the place and actually afford it. So that by the time they actually get into the full, conversations about the spec-in of what type of color scheme I want, etc., they know that they can do that with a lot of confidence and knowing that they can finance a place. And that's really where the partnership is aligned, and that's where we find common ground. And so it's been fun over the last couple of months, and right now, if you go onto the VTC Africa website, you'd be able to pre-approve yourself literally within a couple of minutes. And at the same time, you'll also be able to compare the best deals across all the banks, all right? Yeah. And that's important because you're buying an asset like this. It's a 20 to 30-year product, and you've got to make sure that you've got the best financing solution, for you. So, we're really excited that we get to finance some of these beautiful homes. And, Verissimo, I don't know how you've experienced the year so far.
Yeah, look, at the year's gone, as we said just now, it's gone terribly quick. We've just gone through a nice, brisk, cold winter. And the one thing that I am also excited about is the fact that we, on the backdrop of what we learned from our clients in the past, we formed this partnership, and we looked through the market and we said to ourselves, how can we better the experience our clients have? Because I've said it before, we're fortunate. We build beautiful homes. We're very proud of it. Yeah. And we generally have two types of people that come and see our work: those who buy and those who can't buy. So we thought that, how do we partner up with a team of people with the same idea that's very, very client focused, and we want to bring that ability to understand your affordability as quick as possible. Yeah. This, of course, is on the backdrop of a still difficult market. Let's not beat around the bush. The economy is tight. Inflation has hit every single household, from the price of petrol to restaurants to food, and then everyone's competing. And I've said this so many times, is that sometimes people ask me, what is VTC Africa's competitor? Well, it's every single retailer out there, because every single retailer out there is giving out credit cards and giving out accounts, because they're also feeling the pinch. It's those impulse buys that we talk about. And we said it earlier on, you spend a year buying things you don't need, and then when mommy wants her home, look what happens. Then Tim comes and knocks on your door and says, hey buddy, you've been a naughty boy 4 months ago, or you've been a naughty girl 5 months ago. So like I said in the previous podcast, financial fitness, and I want that word to resonate to those who are listening to us, because even if you buy from us or you buy from other home builders, you need to have a certain level of financial fitness. Sure. Now that means financial discipline. Okay, no matter what you have and where you are, and of course we're all aspirational and you all flick through your cell phones, etc. But sometimes we've seen it. Clients are not able to get their home loan because of something they did years ago. Everything's connected.
Yeah.
So that's why we, firstly, I mean, it's the launch of our VTC Africa Home Loans campaign, Home Loans platform, with the assistance of Tim and his team, is something that's very, very important to us.
Sure.
So I know now when our sales executives bring someone onto our projects, they love what they see, and right there and then, that evening, the family can go home, check out their credit scoring, which is super, super important. I mean, that is the critical thing that all financial institutions look at, which basically talks to your discipline, okay, as a person, okay, and how you handle your finances,
And your relationship with
your
credit.
relationship with your with the financial homes. And then, of course, the second thing is your affordability. What can you qualify for? That is the big question. Now, talking to the banks, and Tim can weigh in on this, we are sensing a little bit, I'm not going to talk out of tune now. Obviously, I don't know what credit is doing. Credit are these bunch of people that sit around the table and wonder how they can, let more money go out the system without, worrying about too much risk. Okay. But again, this is a game of lending and risk. Okay. It looks like we are experiencing the downturn in the interest rates. The fact is, in my opinion, it hasn't happened fast enough. That's the fact. Now, I know that our Reserve Bank focuses heavily on inflation. And I know the inflation is connected to our exchange rate, the rand dollar, rand euro, in our, as far as our trading partners are concerned. But the whole market, in my opinion, could definitely afford a little bit more of an aggressive downturn, in the interest rates. It's a safe thing to do, but we've also got a shrinking economy. Okay, so how do you balance the two and say to the South African public, well, we have to watch inflation, but we've already suffered the effects of inflation. I said it in the previous podcast. We came out of a horrible COVID. Let's not forget COVID. COVID is still absolutely affecting our financial lives. We came out of a very, very low interest rate. There was money left, right, and center. And what happened in the space of a year? The interest rate almost doubled. We went up to almost 12%. What does that do? It basically says to a child, I love metaphors, here's a bicycle, go out into the garden and ride the bicycle. Here's a second bicycle. And then a year later, you take those bicycles away. So that's what's happened. So us as home builders, we need to be cognizant of that and wary of that. And of course, be ready to assist the market in attaining their finance. Hence the fact that we've launched this platform. It's something that we try, and we're obviously marketing the platform. Anyone can go on this platform, even if they don't come onto our projects. They can go onto the platform, they can do their credit scoring without any obligations to VTC Africa, and they can do their affordabilities without any obligations to us. So it's basically a free service, okay, with the assistance of Tim and his team, and we look forward to being a step closer, or creating a better step to enhancing our experience with our customers.
So, I mean, we speak on affordability, and I'd like to believe versus actually qualifying for something. So you have a person here, you earning X amount of money, and you actually afford a house, right? It's where you would love to buy a house, you afford it. But how do you then find balance with actually qualifying ongoing, because you don't want someone buying a house and then struggling to pay it? Because when they walked in, they could afford to buy this house. But now, yes, I can afford, but the market is now fluctuating. And also, how do you help people balance the affordability and qualifying? So when they actually move in, yes, I could afford to buy a house, I could afford to get, the bond granted, but how do I sustain it? Yeah, how do I sustain it? Especially with these interesting times, how do I sustain within my means?
I think it goes back to what Verissimo said earlier. It's about the education. I mean, it's very rare that you find a developer who is thinking not just about the sales of the product, but also about how people are maintaining the product, right? And maintaining the product is about saying, when you buy the house, there's a certain level of commitment that you need to have. So all the fights around all the retailers who are offering you credit cards or payday loans, etc., is you've got to look through that noise and look to the things that are going to give you long-term value over a long period of time and are going to appreciate in value. So it's about you prioritizing that. If the house is important, then you've got to, be fiscally responsible and start tightening the belt and making sure that all your affordability is going towards your repayment on your house. And one of the things that we've done that I think is sort of innovative in these times, because like they say, adversity, breeds a lot of innovation. So what we've also understood is that banks are not going to change overnight. They also are governed by the NCA, and they've got to lend responsibly. Is in our world, we've come up with a product called gap funding, where essentially when we finance you, or when we're looking to finance you, we will consider the fact that if you are a commission earner and maybe the banks take a slightly lesser part of your commission as part of the affordability, we will look at your total affordability, because we know that we are in the gig economy, with things like work from home. People actually have multiple jobs and multiple income streams. So we will look at some of those other income streams that you might have and consider that as part of your affordability when we then help you get the finance for a home like this, right? And a home like this is not something that it's not an instant gratification thing, right? This is about the future. This is about saying, how do I put my money in something that will grow with inflation? Because property, does appreciate with inflation, because the cost of building is constantly going up. I mean, one of the questions that I have for Verissimo is like, how are you even responding to that? Where all your input costs are going up, but you still got to build a house that is going to be affordable and that serves that market. Like, how are you managing all that?
At the moment, it's tough. It's very, very tough. One thing that I've always stuck to is the product and the product design, and we don't want to make the home smaller. So naturally, our other fellow home builders, they would naturally look at building a slightly smaller home. So you start making things smaller and smaller and smaller and smaller, and then you keep the price the same. That's one way of doing it. I mean, that's obviously a very simple way of doing it. We resist that. We resist that because, and we've seen it, the market knows. They walk into our homes and they feel immediately, sense of space, you can furnish correctly, the rooms, okay, you don't feel as if, everything's super, super tight. That's one way of doing it. Okay, is making the product smaller. Changing the specification, very, very dangerous. So to answer your question, I'm hoping that the market will appreciate these things, and that's why it's very important to have an educated buyer. And I must say, Katlego, we have noticed over many, many years, buyers are becoming very, very educated. They know what's out there, and they understand, and they don't even need to have a friend or an uncle in the building game. We have lots of them, by the way, and we love them. I always tell my team and my staff, if someone comes with a critical eye, that's the guy we want, because he keeps us all on our toes. So the industry is under stress. Okay, firstly, if the industry in the last, say, 10 years, let's say 5 to 6 years, I believe it's shrunk by about 35%. We think it's about 35%. I'm talking about the amount of homes being developed. Okay, I'm not talking about the value of the homes. I'm talking about the quantity of homes, both from affordable all the way up. All the way up to the top. Must be at least 35%. And if you analyze it, maybe even 50% reduction. Okay. But it doesn't change the fact that we still have a strong middle class coming through, an upper middle class coming through, and people have reason to move. There's always a reason to move. There's always a reason to buy. Either you're moving out of mommy's home, or you want to change homes. People change jobs. People move their children into different schoolings. So there's always a need for the new homes. Moving forward, because the market has shrunk, okay, because I don't call them competitors, because our fellow home builders, we're a lot smaller. The industry has also had to reposition itself. Okay, so now, that's if you look at the quality of homes that we put out, we haven't changed our specification in about 8 years. Yeah, we do some minor changes here and there, but we still do the right things as best as we can. However, we do feel it. Of course, we would love to sell more homes quicker. Okay, but I don't think that's the problem. I don't think that's the problem. I've said it to Tim and I've said it to a few other people, is that our clients that come to us that have challenges in obtaining their loans, it's not an affordability thing. What we find, it's more of a credit scoring thing. Okay, so that's why I keep talking about financial fitness.
Sure.
I mean, we have families that can afford our homes from an affordability point of view. Maybe Tim can explain that a bit better for the guys out there. But because they've lacked certain discipline in certain areas, the bank says, nope, hang on, this guy will be naughty in the future. Boom. What happens? No
they
go.
choose not to fund
So
it. Yeah.
I think, Tim, like you say, it's that education to understand that the system is completely connected.
100%. Yeah.
Everyone sees whatever you do.
100%.
And that's the message I keep trying to put across, that financial fitness.
Yeah.
Financial fitness, financial fitness, everyone. It's interesting because for the very first time, someone last week asked me and said, Kat, is this a good time to buy? People always talk about it's a buyer's market. Is there really a good or perfect time to buy a house? I'm sure a lot of people have that question because some people hear, it's a buyer's market, it's perfect. And some are like, no, wait a bit, rent out. Well, is this a buyer's market? Can you engage us in that concept?
Sure. So, I mean, from my perspective, I always say, number one, they're not making any new land. So therefore, the scarcity is there, right? And number two, the cost of everything is always going up, right? So one way or another, right, if you plan on being alive for the next 40, 50 years and you want to have, a beautiful home to stay in, you might as well jump in now, right? Get into the habit of appreciating what it is to wake up in a beautiful space and prioritize that space, right? Because in 20 years from now, right, you may not even be able to afford the house that you're staying in because of the cost of everything going up. So you want to be in a position where you've got some equity in that space. It's a beautiful space. And it's also the reason why you need to invest and buy in the right space, right? That will ensure that, you don't have to look at the place and say, I need to now spend 8-9 million at the current price when you know you bought at 2.9 or 3 million, right? And that's why I always say right now, the best time to get into a house was actually yesterday, right?
Can you repeat that?
The best time to get into a house was yesterday, right?
Okay.
And so, so really in all seriousness, the sooner you get in and the sooner you get into the habit of financial fitness, right, the better for you, right? We all need purpose to keep us going and to keep us consistent. And if you don't have an asset like a house, right, you often find that your disposable income is eaten away by a lot of instant gratification things. And often you never know, like, where you spent your money on. But you may have eaten out 3-4 times that week, right? And yet, if you had a commitment like a home, you know that is your main commitment, and you make the commitment, and then everything else kind of fits into place. So that's my sincere perspective around this idea of, is it a good time to buy in? Is get in.
Get in. So you're okay. So Tim is saying, get in. Look, that's what you're saying.
Yeah.
Let's hear what Verisma has to say.
Obviously on the same lines, if you can afford it, like I said before, now's the time to buy.
Okay.
Because, and yes, of course, choose the right place, make the right effort, research the areas. We know that schooling is important. Where you work from sometimes is important. I mean, we see some families would rather drive their kids closer to their home, and they don't mind driving a bit further to their work. But there's a lot to choose. I mean, there's some really good stuff being put out in Joburg at the moment. Obviously, I talk about Joburg because we only develop in the Johannesburg area. It's always the right time, but keep looking, because it's also something that a home is not something that you think you might need or you might not need. You will always need. You will always have a need for a
Yeah.
home. And there's nothing, like Tim says, I mean, I've just thought about this. I mean, there's nothing as special as seeing your children grow up in your own home, seeing your grandmother coming and cook a nice meal for your children in your home. And we spoke about rental. We know rental is a function of life at the moment. We see it coming up in South Africa. We see it coming up all over the world. Okay, the lack of affordability. But there's nothing more gratifying to wake up in your own home. And like Tim says, you are securing possibly your greatest asset. I read somewhere, I can't remember where, that in an average lifetime, you might buy 2.5 homes, which means the average person might buy a home twice in his life or 3 times in his life. That's the average at the moment across the board. So it is, for us, important that we're going to catch you exactly on one of those times. But it's something that will always happen. Either if you're growing into a family, you're getting married, you're planning for children. It's like we've said, and we've said it again, it requires the financial stamina. Let's use the word stamina now. Okay, like when you go to gym, you run on the treadmill, you know you must run for half an hour.
Sure.
Run that half an hour. Put your money where is important. This thing about the impulse buying, we see it all the time. I see it with a lot of people, you know, and all that does, it erodes your ability, to save. We see it sometimes. Families with high income earning families that are unable to save. Why is that? Katlego? Because of the impulse buying. Now, I'm not going to sit here and say you mustn't do impulse buying, but yeah, someone must say it, because it's the truth.
It's the truth, yeah.
I mean, it's the truth. Am I
It
right?
is what it is,
It is
yeah.
what it is, because those things, what they do is you say to yourself, okay, I'm going to buy a little handbag, or I'm getting a new pair of shoes, or I'm doing this. For sure, we all want a nice handbag and a nice pair of shoes.
Yeah.
But
It adds up.
it all adds up. Get into your home. Then you know, hello, wait a minute. End of this month, I have this obligation to myself and to my children, ultimately. And I think the whole message today is, of course, this stamina and the financial awareness that is holding back people. We see it. I mean, people are so super excited. They spend a week, 2 weeks, 3 weeks working on their bond application. And it all looks rosy until they're told, sorry, the banks are declining you. Do you know what happens to that family? I've seen them. They are so demoralized. You know, so obviously what I always say to them is, say, listen, don't give up. Okay, you know what to fix. That's the important thing, and maybe Tim can also talk about that. Is that financial? Let's say that awareness of the problems. Okay, and then telling yourself, okay, I'll give myself 6 months. I'm going to fix ABC there. You can do that.
100%,
Remember, it's not a closed door. Hey?
Yeah.
So you come to us. You want a beautiful home. We have the home for you, hopefully. But we say to you, okay, financial institutions have said no. For these reasons, you do have an opportunity to go away and look at your family and say, all right, we are now going to stop that expense, tighten our
Address
belts
this,
here. And guess what? 6 months later, they go back to Tim, and Tim says, you're in,
100%,
game on.
Yeah.
That's the important message today also, Katlego, is to
I think
remind yourself that you can go back in.
Right. And just to add to that, right, it's not as if you are no longer building, because you've got lots of pipeline. You know, you can actually give yourself the opportunity to say, you know, I may not be able to get it today, but put me down for phase 2 that's coming in 7 months' time, because that's the time frame I need to address some of these things, right?
Absolutely.
And then at least you know you've got something to look forward to and something to work towards. And you mentioned something which is important, is that it's never a no, it's a not yet. Not yet until we solve this. Not yet until we solve that, right? And the idea of that, I mean, just being in here, this is a great space, right? And I can think about anyone who is looking for a house, who walks in here. There's a joy, there's an exuberance, and that quickly turns into anxiety about what you're going to, you know, how you're going to afford the place. And that's why the pre-approval tool that's on the VTC website just gives you that ability to quell that anxiety literally in 2 minutes, because you very quickly find out the reality of where you're at, right? And of course, being able to do that in such a short space of time means you know exactly either to put in the offer immediately because you're good for the money, or I'm going to need 3 more months or 4 more months to come back, right? But please reserve this for me. And that's kind of the combination of marrying the dream and the reality, to get to this sensible state of financial stamina,
I think what I always say, and I always share, and I say that your biggest why will inform your decisions. And that goes back to the financial fitness, financial stamina. Your biggest why you want that property will help you navigate and run away from, spending unnecessarily, And I think with a lot of people, they are being told this and this and this are different things, And someone even said that for them to qualify for a house, they were told to get a credit card so that they can increase their score and get, approved quickly, So I think with what you've both mentioned, you mentioned a lot about knowing more of what you want to do, get educated on buying, necessarily buying, because this is all about all buying their homes. So I think I've personally learned a lot. And while we're sitting here, I'm actually thinking, oh my goodness, I've made some bad decisions. And I've had...
You can still fix them.
Yeah, I can still fix them because phase 6 and phase 7 is relatively. So I can still fix those mistakes. So I think closing remarks from both of you, why someone should walk in or rather go to one-stop shop, www.vtc, and get everything there. It's a one-stop shop, I'd like to believe, because of the partnership, right? So how would you advise someone, and why would you tell them that go to the website and actually get yourself pre-approved? Why would you say they should go for this partnership instead of maybe waking up early in the morning and going to a bank? I'm not saying they shouldn't go to the bank, but what is the biggest advantage with going through this partnership?
It's the one thing that every human being wants, is always about the convenience, the flexibility, right, and the ease, right? In a process like this where you are engaged in, because if you go onto the VTC website, you're not going in there for the finance, you're going in there for the homes. You're going in there to see all the different architecture and how the team have built the place. And what you don't want to do is to now have to go elsewhere, right, to try to understand your finances when you can now do that in the convenience of the same context, right? And so the team will be able to recognize your pre-approval because it will be in the context of you being able to afford any particular development that VTC has. And so that ease of convenience and the experience that you get is the number one reason why you should just simply do both in the same place.
Okay. Very small.
Well, as I mentioned as well, there's no obligation. It's a service that we want to offer the public. It's about increasing our brand awareness. Yes, we want to build and sell homes to everyone. We know we're not going to be able to.
Sure.
Okay, we are very fortunate to have a fantastic track record. A lot of testimonials on our website. A lot of people who follow us, and that's important. I always say we make dreams, and we do make dreams on our handovers. People are happy, the families are there, the grannies are crying. So these things are what's important to us. It is about the flexibility. It's about the convenience, and just bringing those two things together. So visiting our website without obligation, see where you stand, is a fantastic first. It's actually the first point, before you start purchasing, or before you start, let's say, hunting for a home, like they say. And Tim said it, and I've actually witnessed it. Okay. When we get people coming to visit our homes with our agents, and the family is super excited, and the daddy starts to look very, very worried. Pressure, or the mommy starts looking very worried, and the kids are running around and this and that and whatever have you. Can you imagine doing that beforehand, and daddy says, okay, we're in, we're okay, we can afford pre-approval, or our credit scoring is correct. I'm going to come back to that. One thing's affordability, the other one is your credit scoring. So that's the exciting thing about this service that we're offering.
Okay.
In closing, we're heading towards the end of the third quarter, heading towards the fourth quarter of this year. I've got this feeling that this year is going to completely run away from us. I almost saw Christmas decorations somewhere. I can't remember where it was. And then someone said to me, "Ooh, Christmas coming early this year." So I don't know. I think everyone's racing to grab that market share.
Yeah.
Okay. So in closing, I'm going to say, remember, look at your long-term goals as a family. Respect your children, respect yourselves. This is a great way, no matter who you buy from. It is possibly the greatest single way that you can obtain an asset that's going to be worthwhile for you. Because one day when you're 60, you will look back and say, wow, I did it. And I was 35, I was 36, I was 40 years old. So think about those things. It is important. And try and resist if you can all those impulse buys and all those loose temptations that get shoved into our cupboards. And I don't want to make this but maybe we should actually talk about those things, Tim?
Yeah.
Because that's ultimately what
Prevents people.
people from achieving their
Achieving their
goals.
dreams, yeah.
And they don't know this.
Yeah,
I mean, no matter what you're buying, look here, our average homes are late 2 millions, 2.8, 3 million, 3.2 million, but they're good value. That I can tell you right now. Yeah. But even if you're buying an apartment for 1 million or a home for 600,000 Rand, it all comes down to the same thing. And that's what this podcast is about.
Yeah.
It's about educating people to understand how you can obtain funding. Because we as home builders or mortgage originators, we can't change the facts.
Yeah.
Okay, we can't change the facts.
Yes.
Ultimately, what we're doing is we're pairing you up with a financier.
Yeah.
We're saying, here's Tim, here's the house he wants, and there's your bank. That's what we're doing.
Yeah. And I will just, I know you've asked me about the last word, but as Bruce was talking, I'm like, it would be remiss of me not to say two things here. Number one is that we are on an interest rate reduction cycle. So we have hit the peak and the rates are coming down. And that is evidenced by 4 consecutive rate declines that we've had so far. So that means the affordability is getting there. But what helps your affordability is for you to repay any other outstanding debts that you may have had, right? Because as V keeps reminding us that this is not just about the affordability, it's also about your conduct with credit. So continue to make repayments there, and the affordability, the trend is now your friend because it's now moving downwards, right? And the last thing I will say is that the service is free. It's at no cost to you, all right? So you don't have to feel like, oh, there's going to be a charge at the end of the day. Yeah. No, getting pre-approved on the VTC website is free and it's no obligation. But at least it puts you on a path to know. Not knowing is the enemy, right? I always say, ignorance is not bliss, it's dangerous.
Yeah, absolutely.
So rather know, and that level of insight then gives you the confidence to then shop shop for the right house with the right level of confidence.
Sure.
And that's my last word.
Yeah, I think as well. That's my last word.
As you were talking, I have this analogy of someone going to war unprepared. Someone just literally
winging it.
Without actually exercising and training before they actually walk in. So before people actually walk in with their families and their children, prepare for that war. Thank you so much. Thank you very much.
Thank you,
It's been
Katlin.
an absolute pleasure. I've learned so much, and I'm sure the fam also learned quite a lot. And I think I want to do this again with both
Absolutely.
of you. But this time I want us to debate a bit.
Yeah.
Absolutely.
Absolutely.
We can.
Okay, so what I've learned today is absolute financial fitness, education, knowing what you're getting yourself into. And I think it's time for you to hit the gym, but, go back. The gym is you going back to that big plan where you had your vision board, where you had that house, where you had that car, and go back to the drawing board and see what you've been doing to get that, right? To get that house. Don't forget to like and share this podcast. This, is the 4th edition of the Did You Know podcast. If this is the 4th edition, imagine what's going to happen with more editions. See you guys again soon. Don't forget to like, share, comment, and ask us questions that you want us to discuss. Right. See you guys soon, guys. Bye.